Good morning to all traders and welcome to this Friday's Market Insights video where we're going to talk about the main headlines, what affected the markets, and also have a quick look on our Elliott wave analysis and if there is, of course, any changes in the main scenarios that we have been looking and we do look on a daily basis. Now, yesterday, Treasury Secretary Mnuchin sent a letter to Fed Chair Powell asking for any unused emergency funds. Actually, there were 5 programs, asking them to be sent back, although they were set to expire in December. Now, this, of course, is uncertain in the markets because investors used to see that as some sort of credit facility, emergency indeed, but they used to see it as an insurance policy against the deterioration in the financial markets due to the pandemic. Now, of course, investors reacted to this swiftly. Once again, went into the safe haven option of bond. In return, of course, the yield started falling and dollar was driven also down naturally along with the equities. For that, we've seen some other pairs rising, namely the euro and also the pound. On the pound side as well, we've got some optimism around Brexit now as the summit, the talks that were supposed to take place yesterday and they were interrupted due to a COVID, someone being affected from the EU side. Well, the talks moved online and that seems to be seen as positive for the markets so far, at least, while the investors are still trying to work out what really this vaccine means for technology companies, for sectors, for the markets in general. And all that while uncertainty around the vote fraud is really deteriorating as Trump keeps losing the legal battles of widespread fraud or even conspiracy before any court of law in the US. Now, that said, guys, I would like to start with dollar yen today. We're going to have a quick look on the pound and last the dollar. We were talking about last week, right? We talked about this being wave Z over here, and we're looking at this being an impulse, wave 1 and 2 and 3 and 4 and 5, right? I still think that might be the case, and I will tell you why. Is because this is definitely not an impulse to the downside, for sure, which means it's a correction. And this is indeed an impulse, right? However, now having reached a low, okay, at 103.60 or so, then that tells me that we might indeed see a continuation down for a fresh low, okay, for wave C of Z. This is where the triple zigzag of the triple zigzag is going to end, and then we are most likely going to see a reversal to the upside for cycle wave 3. Now, I have marked the 101.16 over here because this is the lowest low of the, if we go back in the charts, this is where all this correction down here, yes, in wave B, this is where this would be invalidated. I do not expect prices to go that far low, but I expect them to go anywhere between 102 and 103. I think this is a very good zone to start considering for prices to start slowly moving up in reversals, in a reversal move. But I would only support this scenario and idea with the trades if and when I see some signals on the RSI and on the market. Now, going on the pound. We talked about the pound as well. We were talking about, we've changed last week, wave 1. Yeah, so we still have a space up to 133.68 to move to. And it looks to me, as I was just labeling, this is W, X, and Y, right, in wave 2. So ABC, ABC, and ABC. This is done, this is done. And it looks like to me we've got 1, 2, 3. Yeah, wave 3 is done. We are in wave 4, right? So to me, this looks like a very nice flat, okay? So A, B, and we are in the midst of wave C. We're gonna get wave 4, and then we will move higher for wave 5. Then from 2, start moving lower for minor wave 3, which is an impulse to the downside. we do see a signal on the MACD, okay? And that's why I also believe that this is, there are good chances of this happening. The other scenario, of course, is that that is 3, that is 4, that is 5, and this is now where we ended, 1, 2, 3, 4, and 5, and it will continue lower. However, I do not like that too much because this is truncated compared to that. Okay, so which means wave 5 would be here, but it would be truncated because we didn't have that, not even a false break, right? So for that reason, I think most likely the first scenario is going to come into play, okay? Or it could be a case where ABC, yeah, this is 1, 2, 3, 4, and 5, right? Also a last but least chances of happening scenario. And now on euro dollar, we talked about this last week, about this expanded flat over here, which meant we went for another move to the downside in wave Z, seeing this as a triple zigzag, right? And this is, well, for two reasons. Usually corrections don't end in a flat. Flats are usually in the beginning or in the middle, right? So that's why I'm looking at this as an ABC. So I'm waiting for wave X to take us around 119.60 or so max, because we did take out the 119.24, which is the 78.6 Fibonacci retracement of the downside leg, yeah. And since that's done, well, I would be expecting higher highs now, right? But I do not want to see prices, of course, moving above wave B, because that could be even considered a 1, 2, 3, 4, and 5, and that could be even considered for the end of this upside move within the mid-degree, and then we'll have a reversal, which means wave 4 would be here, right? But as I said before, I think we are heading for a wave X. And to be honest, I also see a scenario where this can also become an ABC flat, yeah, because I do not like this move as an impulse as much. It is indeed possible because we don't have many intersections here, but it could be a multi-structure move to the upside, but I just don't like it as much. So just keep that scenario also in mind, okay? So enjoy your weekend. Thank you very much for watching, and we'll speak again next Monday.